Focus. Ideate. Innovate. Enable. Forbes India presents the next wave of cloud innovation in association with Google Cloud.
The non-banking financial companies or NBFC universe has had its fair share of ups and downs. But over the years, this group of over 9,500 entities has assumed systemic importance due to their links with the banking sector, capital markets, and other financial entities. The central bank's bulletin from May capturing their performance during the pandemic states that while their consolidated balance sheets grew at a slower pace in Q2 and Q3, their profitability improved as their fall in expenditure was steeper than the fall in income. It goes on to say that the scale of operations and diversity of NBFCs in financial intermediation are testimony to their adaptability and agility in transforming their business models, gauging needs of the growing economy and the evolving regulatory milieu. NBFCs today are playing a pivotal role in taking financial inclusion to the next billion users with a digital-first approach, enabling them to extend financial services to rural regions that are still deprived of basic financial facilities. In today's episode of Forbes India presents the next wave of cloud innovation in association with Google Cloud, we will explore how this ecosystem is leveraging the power of the cloud in promoting inclusive growth for the country and enabling sustainable growth for their enterprise. Joining me to share their digital growth journeys and provide solutions for systemic challenges are Suchit Mishra, Chief Information Officer at Dhani Loan and Services, Sai Kumar Pokuri, Head of Digital Transformation at Vistar Financial Services, Dhanasekaran Shivraj, Chief Technology Officer at Bellstar Microfinance, Sundar Kanyappan, Chief Technology Officer at Deep Quanti Artificial Intelligence Labs, Sachin Arora, Partner and Head of India Lighthouse Practice that focuses on AI, ML, Big Data and Analytic Solutions at KPMG India, and Rohit Verma, Principal Architect for Financial Services at Google. Thank you everyone for joining us on this talk. Let's start by understanding the blueprint for digital transformation that has enabled players in this space to withstand disruption. So I'll start with the key players in the ecosystem. Suchit, Sai Kumar, Dhanasekaran, your views and your approach to digitizing the entire lending stack end to end, from automating processes, instant loan approval and speedy credit dispersal to enhance early warning and digital collections processes. Now, how does it help you improve asset quality, expand product offerings and deliver on customer centricity by offering a seamless experience? Suchit, we'll start with you.
Yeah, hi. Great to be on board here for this discussion. For us, it is really about experimenting a lot, right? Because it's very hard. India is a diverse market, and there are so many customers that we need to support in their day and part and parcel of their lives. For us, really, the cloud enables us to conduct experiments much faster, learn from it, and then use that as a way to provide the best offering to our customers, right? So I think that flexibility that we earlier did not have and now is really enabling us to do that with the cloud and do it much faster, right? So it makes us more agile, makes us much more nimble to respond to our customers' needs in a very expedient manner.
All right. You have a broad product portfolio as well, so it'll be interesting to see how technology helps you expand your product offerings and offer better service to customers. But meanwhile, we'll come to you, Sai Kumar, your thoughts on how your digital stack, how the approach you have taken towards your digital stack has helped you grow.
It's kind of a hybrid model that we have. First of all, thanks for having me here, Gautam. Thanks for inviting me to this panel. So we have it's a hybrid model that we have followed at the moment. So we are a traditional financial services organization. So we focus mainly on the operational excellence in the beginning. So we have started 2010, and it's mostly on the operational excellence. But then now we've started slowly adapting digitization, digital applications. So we deploying all the variety of cloud technologies that we have in the market. So it's a hybrid model, and then we are a way to go. We have done couple of implementations, but then we have to go further. We have to have a further journey on this road, Gautam.
All right, indeed. Your portfolio caters more towards entrepreneurs, and those are SMEs are a considerable portion of the unbanked population, and they need financial services, especially at the times that we are in. So that's the service that you provide. Meanwhile, we'll go to Dhanasekaran for understanding the Bell Star approach to digitizing the entire lending stack. Over to you, Dhanasekaran.
Good afternoon, all, especially to Gautam and then the fellow panelists. And in Belstar, we primarily focus on lending to the underbanked people, especially the women folks from self-help group as well as the joint liability group called as the Pragati. So those people are really underbanked and from the rural. So in order for us to service them as well as to bring all our offerings, financial services, product to them, our innovative digital solution helps us to reach out to them by in the form of various kind of mobile applications given to our field staff who can able to access various real-time informations to assess their credit worthiness and other stuff. So this helps us to take a more informed decisions to understand the people, and we are able to offer a better financial services and products.
All right, digitization is helping you especially assess credit worthiness to your customer demographic. And we'll see how technology is also expanding to other areas to enable you to better service your customers. Meanwhile, let me get in Rohit. Rohit, to get a broader understanding, what do NBFCs need to consider while structuring their technology platforms to capitalize on that next billion users opportunity from, say, tier 3, 4, or 5 cities in a way that they can quickly adapt to broader business trends and market demands to offer innovative and dynamic credit products?
So, Gautam, first of all, thanks for having me as part of this panel. And to answer your question, Gautam, what is it that enterprises need to focus on in terms of a technology platform? I think it has to focus on three pillars. The first is data. The second is around cybersecurity, and the third is around data science. So let me quickly just talk about each of these in detail. So when it comes to data, I think we've all seen that there has been an explosion in data from the traditional, just capturing the debits and the credits and maybe some information from the application form, to now enterprises having to handle large amounts of unstructured data. And this is online behavior. This is data coming from emails that customers send. This is data coming from conversations they have with your executives. So there is this whole explosion in the variety of data, which is leading to a huge increase in the volume of data that enterprises have to handle. So the first pillar of that technology platform has to be the ability to handle this large volume of structured and unstructured data. The second pillar here is cybersecurity. I mean, we've seen in recent past a lot of incidents of very sophisticated but malicious actors using technology to really affect the operations of a business, whether it's through ransomware or through phishing attacks and so on. While at the same time, we have regulators who are focusing on data privacy and security of the network. So the second pillar really has to be that the technology platform has to be rock solid when it comes to security. But at the same time, it has to be flexible enough and open enough to meet the genuine business needs of the users, whether it's employees or partners or customers. And these two objectives are kind of not diametrically opposite to each other. They are two sides of the same coin. So cybersecurity is the second pillar. And third thing, which is very important, is around data sciences. This is where all the data that any institution, whether it's an NBFC or a financial institution, any data that they capture, they can use it to enhance the business and improve the profitability, whether it is improving the processes, getting into straight through processing of loans as an example, giving real time decisioning to a customer, or getting into things like early warning indicator that you mentioned early on in the presentation to get a better view of the risks that they're going to face in the near future. So just to recap very quickly, three pillars of the strategy: data, cybersecurity, and data science.
Indeed, the 3DS approach to structuring your technology platform, which is data structuring, data security, and data science. And speaking of data science, Sundar, let me bring you in terms of enabling financial institutions to use the power of AI and automation. Deep Quanti snap checked that solve for issues of handwriting recognition and verification on checks using ML. It helped in reducing clearing time. What's been the response so far from the wider ecosystem for your product? And what other products are the artificial intelligence labs at Deep Quanti coming out with that can benefit the financial ecosystem?
Sure. Thanks for having me, Gautam, and a very good afternoon to my fellow panelists. Speaking of AI, it's been a wonderful ride. Snapcheck has been very well received by banking institutions. Snapcheck is a product that automates the whole process of clearing a check by reading what's been written on the check in terms of who the check is being paid to, what's the check amount. There could be one or more signatories on the check. So Snapcheck automates the entire process of reading the written content on the check and also extracting the signatures from the check, comparing it with the specimen signatures that the bank might have, and finally give a verdict in terms of whether the check could be passed or not. What this has resulted in is a reduction of almost 6 hours, 7 hours of hundreds of people sitting on their desks to clear the checks. So this is a nightly arrangement that goes on in a bank, right? A team of people come in, they look at the checks, pass one check after the other, and this goes on for an entire night. This has been automated, and the entire clearing happens in a matter of an hour or so, without any manual intervention. So that's the kind of impact that we are able to bring about through Snapcheck. We also have other very interesting and cutting-edge products that help in credit assessment, loan sanctioning.
Right. So that's the product universe kind of catering to the wider ecosystem and coming up with solutions. Again, as financial inclusion grows, it's bringing up interesting use cases, but at the end, technology is providing the answers as well. At this point, Sachin, let me bring you in, considering that we now have eKYC for instant onboarding, loan automation for instant credit, and digital payments for instant payment. And we've seen a few other use cases emerge as well, as Sundar talked about Snapcheck. Where do we go from here in terms of customer journeys enabled by technology, especially as customers demand more richer and seamless experiences during the entire cycle of their engagement with the enterprise?
Yeah, so I think I wrote a thought leadership on this a while back that a lot of digital native NBFCs have scored better than many others in terms of offering great customer experience, while the larger banking customers who have been focusing on lending have been able to do good business, because obviously India is a big market. But I think the use of I saw my fellow panelists mentioning about data science and cybersecurity. I just want to add a little more RPA and automation to it, which is basically helping the whole experience bit getting into the next level. But nevertheless, machine learning and AI can actually power these NBFCs with robust collections of payments and monitoring decisions. NBFCs have relied on customer account balances and credit scores to prioritize non-performing and sort of delinquent accounts, formulate strategies, collections. With the availability of the data that we have today, these NBFCs, the ability to drive and synthesize insights is going to be the key factor on which one scores better over the other. So I would leave it at that point.
All right, that flows into what Rohit had mentioned as one of the pillars, which is data structuring. And since we have broadly spoken about the tech stack, let's also look at the specific challenges. And when it comes to data structuring, there's data sanitization itself, which is very important to obtain customer insight. So at this point, let me bring you in, Sai Kumar. While data is the new oil, obtaining relevant data in the context of banking and digitally streamlining lending has some trust related challenges associated with, say, data available from account aggregators, considering that the AA ecosystem is still at a nascent stage. Now, this lack of data sanitization and validation could limit the ability to make informed credit decisions. So how did Vistar address these challenges and improve the quality of its data to help small businesses who face sort of an information asymmetry in consolidating their financial data, resulting, in only, I think 10% of them have access to formal credit till now? How did you address this issue?
Yeah, so first let me talk about the data sanitation and data validation, as you rightly asked. So I think the primary area for us to focus on at the moment is the data availability and what I call as a data discipline. Rather than these two are the more critical aspects than the data sanitation and data validation. These come at a little later stage after the data is available. Now, when we talk about data availability and data discipline, so see, whenever you solve certain problems or business problems, you understand there are some insights that you need to derive out of the problem. Now you go and search for the data, whether it is available or not in the ecosystem or maybe outside the ecosystem. For that matter, we reach out to credit reporting agencies, we reach out to account aggregators as well. But having said this, we have a plethora of options, plethora of sources where we can source the data. But at the same time, is the data that we need, is it available? I would say, to me, majority of it is not available, because see, the data is in its raw form, so you have to synthesize the information from the data that is available, which is pertinent to your business problem. Now, how did we address this? So we have found out the data. We have found out to reach out to different sources, internal or external sources, to find the data and then churn the data and then bring it to our system internally. So that's where we have made efforts to make the data available in the ecosystem for us to process for further analysis of the problems. Now, the second aspect is the data discipline, which I spoke about. Data discipline is data availability is something that is not in our hands. So we just go out to the source and then we identify the data and then we get it. And if it is available, we put it in the system. Otherwise, we find different ways. Data augmentation is one other aspect where we can make the data available. But when it comes to data discipline, so what about the data that is available in the ecosystems? Are we actually making full utilization of the data that is available in the ecosystem? I would say not many, because so the field team, when it actually feeds the data into the system. So not every critical information of the customer is being fed. That is where we followed an approach called data discipline, wherein apart from just the KYC, every information of the customer has to be fed in, and eventually we have to streamline the process, and we have to collect the data and then streamline the process to make better uses of the data. And that is what we have done at Vistar, wherein we have designed a three-layered architecture. First is the consumption layer, at the back end is the data layer. Data layer, making the data discipline and data availability are the key aspects, and then making the data available at the back end to be able to make the customer use the data at the consumption layer is something that we have achieved through our three-layered architecture, which we call it as OMI.
All right. And how successful have you been in preventing data errors? As we talk about sanitization of data, your field teams are collecting data from users, but the point of error comes from, the human side of things, because at the end of the day, your systems are processing whatever is data is fed to them. So how do you prevent data errors?
See, there are one aspect to it. We have heavily were dependent on the ML workloads, okay, ML or AI applications, wherein you have predefined formats for each and every parameter that we collect into the system. So now with the applications or with the ML applications that we have internally, we predefine the formats of each and every parameter that we feed in. So only after this sanitation happens, the data flows into the data servers or the data table at the back end. So now we have two different systems. In between, we have an ML application sitting to filter the data that we get from the from the field, and then making the data, the sanitized data, available to the users for consumption. So we have heavily dependent on ML workloads. We have designed an application internally with the help of a strategic partner that we have. with the predefined formats for each and every parameter to filter the data and then make it process.
All right. There's the other side of the human technology balance as well. And for that, I'll come to Dhanasekaran to understand, how does the human and technology element work, considering, Bellstar Microfinance, let's say, when it has a lot of on-ground field agents, and they have been critical touch points in general for the MFI universe to understand the financial options for the target segment that they serve. Now, in this context, group guarantees from self-help groups or joint lending groups providing the peer pressure to repay loans have worked. So if technology ramps up in its role in determining credit and enabling repayment, my question to you is, what happens to the human element which has worked for you so far?
Human touch or human connect is one of our USP when we touch base with all our customers. So center meetings as well as group meetings are one of the key areas we always connect with our end customers. How we are deploying our technology? We are deploying our technology to enable us to determine what kind of a meetings or what kind of a date areas we can choose for the meeting, so that people can able to come for the meetings and then participate in the meeting. So we rely technology as well as to connect with our end customers. So by adopting the data analysis and then data science, so what we do is we analyze our customers' behavior and then their pattern of repayment, and based on that, based on their availability, we helps to determine the center meeting dates for a particular locations. Since we have we are operating from more than 650 branches and with more than 5,000 employee base, it is very, very critical and essential for us to connect with our end customers at least once a month. Our technology helps us to ensure these meetings are happening and all the members are coming to the meeting, and so it is how we are making use of it.
So it's the context of the outcomes. You look at what works for you and then layer in technology to make sure that the data helps you in your human interactions. Fair point. Point taken. Let's look at another challenge as well, which is managing an ever-expanding portfolio, considering these are not times where enterprises are static. They cater to the customer by offering new products. And Suchit, here I'll bring you in, considering the variety of services that the Dhani app offers, spanning affordable credit and digital payments to affordable healthcare. I want to understand from you, how did you synchronize and optimize costs around your IT deployments?
Right, that's a great question. So here at Dhani, as you know, we're trying to be a super app, and we have on one side the wealth related platforms, which is like the payment, the buy now pay later model, a wallet, and of course a credit card, the Freedom credit card, and then online stock trading. And on the health side, we have what we call as the online pharmacy delivery, like delivery of medicines within an hour, and also providing online doctor consultation. Right. So when we look at the entire stack, most of it was earlier running in a traditional data center type of a setup, right? Which did not give us the option to quickly innovate, right, for our customers, right? So moving to the cloud actually completely opened up the gates for us, where hey, the business comes to me and says, I want to try out this new construct, right? Let's say I want to, whether should we deliver medicine within an hour or want to deliver if 3 hours is enough, right? So like all sorts of A/B testing that we need to do to better serve our customers, we can do in a matter of a week or two, right? Which will earlier take, if I have to provision a server, even with my data center today, it would easily take, with COVID and everything, 6 to 8 weeks. Whereas in the cloud, I'm much more nimble and agile in terms of doing that, right? From a technology standpoint. Second is the reliability, right? When I'm doing all sorts of experiments, that could be a sudden spike or a sudden scale up in the infrastructure depending on the user demand for it, right? And that is really well orchestrated in the cloud, where we can auto scale up and down depending on our needs, which is something the data centers did not really provide out of the box for us, right? And then I think people talked about security. That's again front and center. We're dealing with very sensitive customer information. and right out of the box, we get a lot of security benefits that we could just leverage without having to invest a lot of resources and manpower to do that in the cloud, right? So I think that really helps us cater to our business needs and also serve our customers much better.
All right. So that's the power of the cloud, which helped Dhani go from being an app to a super app. At this point in time, let me get you in, Rohit, from the perspective of scalability, reliability, simplicity, and risk management, which Suchit has outlined. How can cloud-based systems enable NBFCs to do more with less? As I mentioned in my introduction, the profitability of this sector has improved because the fall in expenditure was steeper than the fall in income. So from that perspective, how is the power of technology, how's the power of cloud enabling players in this space to do more with less?
So good point, Gautam. So the 4 words that you mentioned, scalability, reliability, simplicity, and risk management, these are not 4 silos. They are actually interconnected parts of the same equation. And let me explain how cloud can help address each of these. So cloud-based systems can fundamentally take away the pain of managing and the complexity of managing IT infrastructure for NBFC organizations. And in doing so, we also deliver it at scale and with full reliability. Take virtual machines as an example. Here at Google, we have auto scaling and auto healing capabilities. Now, what it means to the end user is that if the workloads go up, our machines can scale seamlessly. And when the workloads go down, it scales down seamlessly, thereby reducing costs. And in doing all of this, if at any point of time a virtual machine goes down, it auto heals itself by creating a new machine and takes over the work of the machine that has gone down. So that's one part. The other part is, let's take an example on the data sciences part. So traditionally, if you have to build a model, it will take you months to deliver that model, running through the data, iterating, testing, and so on. But using a lot of the advances in artificial intelligence, you can go from idea to implementation of the model for business purposes in a matter of days. Because through auto ML kind capabilities, the system, the framework itself can give you what the best fitting model is, rather than a human iterating through multiple such results and then coming to the best fit. So the reason I brought out these 2 examples is because I wanted to highlight the fact that through all of this, cloud kind of isolates the end user from the underlying complexity, whether it's making the machine available 24/7, whether it's making the whole process much faster. The business user does not have to worry about the complexity, the engineering complexity that's under the hood. All they have to worry about is making sure that they come in and get about doing the business, and let the cloud providers take care of scaling, of fixing issues, and really doing the heavy engineering under the hood to make life easier for the end user.
All right, the magic behind the service, that's the power of the cloud. But since we're speaking on cost, I also want to understand the role that AI plays here, following up to what Rohit had mentioned. Sundar, from the lens of AI and automation, how can financial institutions save costs while expanding their services to customers? Now, FIs currently use predictive analytics to identify fraud, measure credit risk, detect anti-money laundering patterns. What are the new cost optimization use cases, in your opinion, emerging for AI in this space?
Well, I'll outline the broad principles based on which we work. There are 2 aspects to note here. One is AI has been evolving in the last few years to a large extent. It continues to evolve, and therefore the technology behind it is also evolving. The next thing is we at Deep Quanti, we sincerely believe in what Andrew Ng, he's a pioneer in computer vision, he mentioned. So what Andrew mentions is any decision that takes up to 30 seconds for a person today, all of those decisions can be automated. So in that lens, viewing the entire automation of business as through that lens, it means that we are only scratching the surface at this point in time. Right? there's a lot more work to do, a lot more possibilities where AI could come in and automate decisions. So you take any bank, even a loan disbursement process could have hundreds of sub business processes. A majority of them are getting automated, but then there are all these small processes that needs to get automated. So if you break down the process of the process for any NBFC or any banking institution, I still see a lot of scope for automation through AI because of two reasons. One, the science and research behind AI evolving on a daily basis, and then the cloud providers like your Google and AWS and Azure and all these guys coming in and supporting the implementation of these AI through their cloud infrastructure.
Absolutely. And as more and more technologies come about, it's also important to understand where to deploy them and how exactly it works in the context of outcomes. Let me bring you in on that point, Rohit. Fintechs are racing ahead of banks and NBFCs to ease borrowing for customers and solve the limitations of the finance ecosystem. Now, banks and NBFCs are also changing their mode of operations, as we heard from our speakers, but at a much slower pace in the broader ecosystem, due to their legacy infrastructure, frameworks, approval processes, and tight-knit integration across business and technological value chains. Now, the challenge for them seems to be identifying which ideas to actively pursue to embed capital and technology. Now, the complexity, scale, and siloed nature of banks, for instance, restricts them from doing all of this effectively. So how, in your opinion, can this be addressed?
So, Gautam, I think the answer here lies in collaboration rather than competition with fintechs. So fintechs have their strengths. I mean, they're digital natives. They have their ability to leverage technology to improve the distribution and sourcing of new business. They're able to better segment the market and offer really differentiated and bespoke products for different segments of the market, which goes to their credit because it's a fairly complex market to crack. And while it's true that NBFCs and financial institutions have legacy frameworks and legacy processes to contend with, it is also a fact that there is a large amount of expertise in terms of credit evaluation, credit underwriting, and entire loan management that NBFCs bring to the table. So in my opinion, these two are kind of complementary. And this is, again, an area where technology can help NBFCs enhance their distribution. So by developing a good API platform as an example, where you can develop your APIs, publish them, and monitor them, you can really partner with these fintechs and expand your reach to the furthest corners of the country, even though your physical presence may not exist there, by developing a collaborative approach with these fintechs. So the answer is really collaboration rather than competition, and technology can enable this collaboration, and APIs are a very good example of how this can be enabled.
Absolutely. Open APIs, a platform which helps both fintechs and NBFCs co-create value. But following up on that, let me bring you in, Sachin. You wrote that in the context of AI transforming enterprises, that while digital natives start using AI with their customer experience as their primary motive, and then move towards operational efficiencies as they progress, traditional enterprises are focusing on operational excellence to begin with and are moving towards improving customer experience over a period of time. So I want to understand from you what comes next after the singularity of, say, CX and OX is achieved by incumbents and neo players in this space. And as Rohit said, they co-create value. Will all finance companies now need to behave like technology companies just to survive in this hyper-competitive marketplace?
Yeah, Gautam, I think it was partially answered very well by Rohit previously, that collaboration is perhaps the right way to go, not the competition. So earlier it used to be, human-led sales to kind of increase business, but now these tech platforms and the digital natives that they're using is help them build leads and adding to their CRMs. On servicing front, they're using almost all possible channels, not just calls but WhatsApp, Telegram, and many other channels to reach out to their customers. So I think the ability for them to bring new customers is massive, and they're increasing the productivity of humans. What was earlier a branch-led business to now becoming a little more centralized and then these leads are given to the branches to go out and fulfill those, is a sort of a large business that can be created. And if the older school thoughts of bank and NBFCs collaborate with these new age fintechs, I actually like to call them tech fins, because they're technology first and finance later, they can definitely move on in the right direction. So, and then taking the cues from the technology point of view, I think we just pretty much discussed about all verticals of cloud, data science, RPA, automation. I think all of this will come together to build better workflows, which will increase the productivity any which ways. Machine learning and AI have been talked a lot around, helping them assess the credit risk and stuff, but it definitely really helped them do the micro segmentation, both in the acquisition space and in the collection space. And in the collection space, all the more because it could help reduce the cost of collecting the money, which is where the the real lending lies. The real lending lies is not to lend, but have a strong ability to sort of recover. So collaboration, as Rohit mentioned, is the way to go, and sort of a API based, or I would call it like an open innovation platform where you could do things like co-lending, and co-lending is one of the fast sort of taking pace in this market, where these tech wins are generating leads and allowing the some of the old school NBFCs to come and participate with them in those lending opportunities, hence increasing their asset under management or a book value. So I think time will unfold and tell us what it has in for us, but pretty exciting to see a competition now becoming more a friendship in time to come.
All right, let me get one of the players in the ecosystem to respond to that. Suchit, in that journey from making Dhani an app to a super app, have you become a tech fin, as Sachin mentions?
Yes, definitely. I think there has been an increased focus on using technology as an enabler for doing our business. We have pivoted significantly in just in the last year or so, right? Just the way we are doing things are all centered around. It starts with technology in many which ways, right? Because we clearly see the advantage. Like somebody was saying, right? This is all about as they say in the startup world, the first mover advantage, right? If you're able to offer a better product or a better service to your customer, and you're the first to the market, clearly you have a lead, right? And that gives you an insurmountable advantage in terms of the business, right? And cloud really enables us to do that, right? And very quickly, like I said, yeah, even if you have an idea, when you take it to the market, you don't know exactly whether it'll work or it won't work, right? And if it doesn't work, you want to quickly learn from it, iterate, and then come back to the market again with something, right? So that nimbleness, that agility is absolutely paramount, right? If you are in this space, because I think we started the conversation saying the audience has very short span of attention, right? So if you don't have a sticky app, you don't have an offering that'll really serve their problem or solve their problem, you lose in very quick order, right? So I think that's absolutely table stakes in our mind.
All right, considering the agility that you speak of, which cloud enables for you, how does that help you, say, capitalize on the digital payments opportunity? I believe digital payments and transfers, they've grown by 44% between 2019 and 2020. So considering this rapid growth in the payments ecosystem, what are your long-term plans, Sujit, to capitalize on this opportunity as transaction limits get raised and retail digital payments in offline mode, as proposed by the RBI, come soon?
Right. I think there will always be this world of underbanked people, right? And I think that I was surprised when I was in Germany a few 2 years back, right? And I realized how spoiled I was sitting in India, because I could just do everything using a Google Pay or an equivalent payments solution, right? And unfortunately, even in Germany, I had to carry cash around to buy simple things as fruits and vegetables, right? Which was shocking to me, right? So India's actually leapfrogged that whole generation in a way, right? We moved directly from a desktop or whatever to a mobile first country in many ways, and that has, I think, primarily funneled this whole growth in the mobile app ecosystem, and then of course payments has, I think, by far the biggest reach, right, in that, right? So I think going back to some of the other panelists who said, right, I think what will be interesting, the next wave of innovation is going to be a mix of these different, like it's a health and that and the fintech, or it could be the let's say the real estate and the fintech. I see a lot of more interesting innovations happening on the periphery of these different markets, if you will, right? I think that would be something that I think to watch out for, in my opinion.
Absolutely. And technology helps enterprises capitalize on that leapfrog of innovation into creating leapfrogging of growth for their enterprise as well. It's been a wide-ranging discussion. We have covered various facets. So let me bring in Rohit as we conclude this discussion to get his thoughts on the key highlights of the discussion in terms of how the next wave of cloud innovation benefits NBFCs in India. Rohit?
Sure. Gautam, the two or three things that kind of jumped out from this discussion. First was that it looks, it's pretty evident that NBFCs are going to increasingly focus on financial inclusion, right? So reaching out to the smaller cities, to reaching out to the entrepreneurs in far-flung corners who are trying to set up their new businesses and include them in the financial growth of the economy. And NBFCs will be focusing big time in that space. The second thing that came out was the fact that in all of this, data and data sciences will play a big role, whether it is in sourcing the business through collaboration, whether it is straight through processing by leveraging AI, so that credit decisions can be made in a matter of minutes rather than hours and days. And also maybe in the area of fraud detection and anti-money laundering, where again data sciences can play a big role in saving costs and improving the health of the entity. So that was the second thing. And the third thing that also came out was the fact that technology will be the backbone of all of this. And rather than investing and pushing the resources in managing IT infrastructure, cloud can play a great role in freeing up the resources for NBFCs so that they can focus on business and let us take care of the underlying engineering complexities needed to run our IT infrastructure. So yeah, these were the three things that were the key highlights for me from this.
All right, Rohit. On that note, we come to the end of this very insightful discussion titled Forbes India presents the next wave of cloud innovation in association with Google Cloud, with an eye on the digital growth journey of non-banking finance companies. I'd like to thank all the panelists for sharing their insights and experiences on the topic. And of course, thank you to our viewers for tuning in. Till next time, this is Gautam Srinivasan signing off.
Forbes India presents the next wave of cloud innovation in association with Google Cloud. Focus, ideate, innovate, enable.